Hey, what is going on, guys? My name is Nick, and in today's video I'll be talking about one brand new stock that I just bought that I think is incredibly undervalued. And this stock is called Equitable Bank, or EQ Bank, trading on the Toronto Stock Exchange as EQB.TO, which is an online small cap Canadian bank worth only about 2 billion Canadian dollars. In today's video I'll be sharing my current position in EQ Bank stock, why I'm buying this bank stock, and finally how much I plan on buying if the stock price remains low. So make sure to demolish that like button for all the research and transparency that went into this video. I really do appreciate that. Finally, I'd like to thank today's video sponsor NEO, but more on that later. Alright, so I just started a position in EQ Bank stock this past week where I now own 45.4 shares of EQB.TO at an average cost of $52.93 per share, and this all adds up to about 2,420 Canadian dollars. And honestly, I couldn't be happier with my cost basis so far, considering that the stock was trading well above $80 Canadian per share just back in November of 2021. Zooming out a little bit further, we can see that the stock has been incredibly volatile over the past 5 years, but it's also produced solid returns of over 100% after including dividends. Comparing that to the S&P 500, which is only up about 60% after including dividends, it's clear that EQ Bank has been outperforming the broader stock market. So now here's a quick summary of EQ Bank's Q1 2022 earnings report that they released back in May. Now the first thing we can see is that EQ Bank reported record results once again, where their revenue grew 25% year over year to $188 million in the quarter, while their loan originations grew 29% year over year to $3.5 billion, which are both incredibly fast growth. But I will say I would expect their loan originations growth to slow down significantly, given that the Bank of Canada just raised the prime interest rate from 3.7% to 4.7%. Yes, that is a 100 basis point increase. So obviously less people will be wanting to take out a loan when it costs them so much more in interest to do so. However, I do believe that revenue should continue rising for EQ Bank, as they will be making a lot more money in interest income, as we'll speak about in a minute here. Next up, earnings and diluted EPS both grew 27% year over year to $87.9 million and $2.51 respectively, which are again very strong growth in earnings for a bank stock. If you compare this to any of the top banks in Canada or the US, I can almost guarantee you that EQ Bank is growing much faster. Third, we can see that EQ Bank reported return on equity, or ROE, of 18.3%, while their adjusted ROE is 19.2%, and these simply indicate that EQ Bank's management is very effective at deploying their capital and earning a return on it. Fourth and finally, a very important metric to look at when it comes to a bank stock is their efficiency ratio, and this simply indicates their non-interest expenses as a percentage of their total revenues. So basically, a lower efficiency ratio reflects a more efficient cost structure, and the business should have higher margins. In Q1, EQ Bank reported an efficiency ratio of 39.9%, which is extremely good for a bank. Comparing this to TD Bank, they have an efficiency ratio of 53.6%, meaning that over half of their revenue is taken away by non-interest expenses. So because EQ Bank is a purely online bank, they don't have many of those overhead expenses that the traditional Canadian banks have through their branches spread all across the country and across North America. Now before we get into EQ Bank's valuation and price target, I do want to tell you about our sponsor NEO. NEO is a digital alternative to the major financial institutions in Canada, created by the founders of Skip the Dishes, offering a wide variety of financial products. In fact, one of their products I recently got my hands on is this NEO Cashback MasterCard, which has 0 annual or monthly fees, and you'll also get a $50 credit when you sign up. With the NEO Cashback MasterCard, you can get an average of 5% cashback at over 7,000 NEO partner locations across Canada, including Earls, Lululemon, Canadian Tire, and Petro-Canada, just to name a few. For example, I recently went out to a local board game cafe, and without even checking if it was a NEO partner location, I used this card and I ended up getting 9% cash back, which is simply unbeatable by any other credit card. But even if you don't shop at any of NEO's partner locations, you can still get a minimum of 1% cash back on all of your purchase transactions that you make. And the sign-up process was super simple. I signed up online and got my digital card right away, and then within 2 weeks, I got my physical card in the mail. And yes, this card is available to everyone in Canada, including those in Quebec. So if you're interested in signing up for this NEO Cashback MasterCard, you'll earn a $50 credit when you sign up and up to 15% cashback on your first purchase using the link down below. Guys, I'll be totally honest, this is an amazing credit card for Canadians. You can earn a ton of cashback and build your credit score at the same time, so I would highly recommend it. Anyways, moving on to EQ Bank's valuation and their price target, the first thing that I want to show you is EQ Bank's book value per share, which was reported as $57.64 at the end of Q1. And based on their current stock price of about $53, that means that EQ Bank stock is trading for a price to book ratio of 0.92. In other words, right now you can buy EQ Bank stock for less than its net asset value, which is absolutely ridiculous for a bank that just grew its revenue by 25% year over year. Furthermore, their price to earnings ratio tells the same story. EQB's trailing PE ratio is currently just below 6, which is again just insanely cheap for their growth rate. Even if we estimate what EQ Bank's forward price to earnings ratio would be based on the annualized Q1 2022 earnings of $2.51 per share, we come to a forward PE ratio of only 5.3, which is absolutely ridiculous. Please tell me if you know of another stock that's growing its earnings at 20% plus and trading for a trailing and forward PE ratio below 6, because I simply don't think it exists. As for EQ Bank's price target, we can see here on TipRanks that all 7 analysts covering the stock have an average price target of $84.50 Canadian per share, representing 59% upside from the current stock price of $53 per share. Also, every single analyst that's covering the stock has a buy rating on it right now, which does give me more confidence in my thesis around EQ Bank. Now, another huge reason why I love EQ Bank stock right now specifically is because interest rates are going up quickly. As opposed to almost all other types of companies, banks actually benefit from rising interest rates because it makes them more profitable. And that's because banks will take advantage of the difference between the interest rate that they charge on their loans and the interest rates that they pay out to customers on deposits within the bank, which is known as the net interest margin. For example, we can see that EQ Bank just followed the Bank of Canada in raising their prime rate from 3.7% to 4.7%, but then we can see that the interest rate on their Savings Plus account is still quite low at only 1.65% annually. That means that EQ Bank's profitability just rose massively since their net interest margin is widening over time. So personally, when I see all of these bank stocks being down 20 to 40% right now, while their net interest margins are only rising and getting wider and wider with rising interest rates, this seems to indicate an incredible buying opportunity, especially in the case of EQ Bank, which is the cheapest. Yes, the rising interest rates could end up causing a recession, which would mean that the banks need to book more provisions for loan losses on their balance sheets, but overall I think it's a net positive that interest rates are going up for the banks. Another reason to invest in EQ Bank is for their technology-focused approach to banking, where they just announced their cloud integration with Microsoft Azure. In their press release, they say, in moving its digital banking systems onto Azure, EQ Bank just became the first bank in Canada fully hosted in cloud architecture. Azure powers a majority of Equitable's core business functions and empowers the creation of innovative and secure solutions across all bank functions. Since adopting Azure, EQ Bank has reduced overhead costs, which allows savings to be passed on to the customers and enjoys the flexibility of a more agile system with always-on platform security from Microsoft. Furthermore, EQ Bank just announced a partnership with a company called Flinks, where Flinks is a leader in open banking, which provides EQ Bank customers with the ability to share their financial data securely with third-party fintech applications of their choosing. For example, if you use the Mint app or something else to track your finances, EQ Bank will now integrate seamlessly with all of those apps. And this to me definitely solidifies the fact that EQ Bank is a technology-forward bank. Alright, so given all of this information, how much of EQ Bank stock would I end up buying in total? Well, I honestly believe EQ Bank stock is one of the best opportunities in the stock market right now, having a lot of upside over both the short and long-term future. With that being said, however, EQ Bank still is a small cap stock, being worth less than $2 billion, so that means I do have to limit my position size just in case something goes wrong. So I would love to make this into a $15,000 to $25,000 position within my portfolio, provided that the stock price stays below its book value of around $57 per share. And I'll be adding much more aggressively if the stock price does fall below my cost basis or even below $50 per share, but honestly, I do think this is a quite unlikely scenario given how cheap EQ Bank already is. Anyways, I absolutely love this stock right now. It's a quickly growing company, very cheap, forward looking, and it's definitely going to be around for the long run, so I am very interested in this stock. And I will be updating you guys on their Q2 earnings in early August, so make sure to stay tuned and subscribe to the channel. But anyways, leave me your thoughts down below on what you think about EQ Bank stock. Would you end up buying this stock, or are you able to buy this stock right now? Do you have any cash? I would love to hear it. And with that being said, make sure to drop a like on this video, and don't forget to sign up to NEO using the link in the description. It's an amazing credit card. Once again, I would highly recommend it. And with that being said, I will see you guys in the next one.